What happens when the interest rate rises and you're wanting to purchase a home in Las Vegas? Is it worth it? Stay tuned because I'll be giving you my insight coming from the buyer's perspective and the seller's perspective. Now let's start with the buyer's perspective. What does it mean for you when the interest rates goes up? It means that it's going to cost you more to finance to purchase your home. It's going to cost you more money to borrow money to pay for the home you love. So now let's take a look at this chart. This chart shows a 30-year fixed mortgage rate from 1971 to today over the last 51 years. As you can see, in the past 13 years, we have been under 6% interest rate. Yes, we had the unexpected super low interest rate in the 2s and the 3%, but historically speaking, we've had the lowest in the last 51 years. The highest point was in the 80s with over 18%. Can you guys imagine paying 18% on your mortgage? That's 3 times as much as the interest rate today. So historically speaking, I feel that the rates that we're hovering over right now between 5 to 6% is not that bad. Although in the last few years, because of the pandemic and other factors, we were just so used to the 2 to 3%. And for those of you that were able to score those amazing interest rates, good for you. That's amazing. It's gonna keep your mortgage rate down. But again, consider yourself being in the shoes of a buyer right now. What does it mean for you if you have a higher interest rate and what that impacts on your monthly mortgage payments? Let's dive into this further. As the purchasing power of the buyers diminishes as interest rates increase, the demand to purchase homes decrease. You guys, we've experienced a market shift here in the last few months, and what that means is that there's more inventory in the marketplace. Right now, when I look at active listings of single-family homes, we have over 8,000 homes. And last summer, when it was very low inventory, when we were experiencing the multiple offer situation, we were experiencing less than 2,000 homes on the MLS. We have 4 times as much of homes now on the marketplace, which means that homes are sitting on the active marketplace for a longer time than it's ever been. Now, let's take a look at this other chart that will explain to us what you can afford based on the different interest rates. As you can see, your purchasing power is dictated by these interest rates. And remember, median price in Las Vegas right now is about $465,000. And for that, you could get a 3-bedroom home, 2-bath, maybe smaller than 1,800 square feet. You'll be lucky to have a yard, but definitely no pool for that price. So looking at this chart here, let's just look at the first line. For a monthly payment of $2,000, what you could afford at a 3% interest rate was $474,000. And that's about that median price that we're talking about right now. However, as the interest rates go up, 4%, you are only able to afford a home that is $419,000. At 5%, $372,000. 6% right now, $334,000. What can you get for $330,000 in Las Vegas? Now, it's going to get more and more difficult as your interest rates keep going up and your purchase power goes down. Maybe you were hoping for a single family home, but you're not able to find a single family home at that price point. You may have to be creative and look for a townhome or a condo. That might be your first step into becoming a first-time homeowner for a lot of people. So as a buyer, there's a risk in waiting to purchase, and here's why. A lot of industry professionals are saying that the Feds are going to be increasing the interest rates again next month in September, and they're anticipating between 0.5 and 0.75%. Now imagine that. Another increase in the interest rates, slower demand on purchasing a home, so less buyers are going to be able to afford to buy. And the truth is, I have a lot of buyers under contract with the new home sales, and my buyers are okay, but I have heard from my new home specialist that a lot of contracts are being canceled because people that were able to afford these homes maybe 6 or 8 months ago when they started the process are now not able to make their monthly mortgages and payments and afford the home that they had purchased and committed to. So what are the new home sales people doing right now? Well, they are actually offering a lot of incentives. Some are offering up to 5%, 6% towards closing costs and point reduction. So what that means is, let's say the interest rate right now is hovering around the 5%, 6%. The new home builders are purchasing points reductions so that you're able to afford that monthly payment. Maybe that was the monthly payment 6 to 8 months ago when you were looking at purchasing the house. Now with the different landscape, the builders are offering these incentives so that you could keep this purchase agreement and move forward with the closing. It's just really unfortunate to hear that a lot of these contracts are falling through. My recommendation for buyers, everyone has their own different situation, your own vision and goals for real estate. You really need to think about how long you're going to hold this real estate. Is this a short-term investment? Is it a long-term investment? It all really depends, and the fact of the interest rate really matters depending on your real estate goals. I've had somebody tell me recently, marry the home and date the interest rate, right? And I'd love to hear your feedback on what you think about this, because if you found a perfect home, your dream home, whatever the interest rate is, the longer you wait right now, the interest rates are going to go up. So you do want to jump on it. You do want to make that offer and get that home. And then eventually, if you like, you could refinance. And that's the whole theory behind this dating this interest rate, right? You're not married to the interest rate. You have flexible terms. And there's so many different programs out there that, again, if you need a local lender contact, please let me know. I have a handful of them that I could connect you with, and you could explore different options. Because if it's a short-term vision for you, for your property, let's say this is just my starter home, and you know that going in, then maybe there's different programs and different ARM programs where you could actually have a set interest rate for a limited time. And then by that time, you already know that this is a starter home that you want to move up. So you're able to leverage that equity in your starter home and move up to a bigger, a nicer, a better community home. If that is your vision, there's so many programs out there, and I really encourage all of my buyers to take your time, to do your due diligence and do your research on the different lending programs, because there's so many out there for me as your global real estate advisor to educate and communicate with you on what's going on to make the best decision for your particular real estate goals. By the way, if we haven't met yet, konnichiwa, my name is Kaori NAGAO, your Las Vegas lifestyle specialist, helping you find your new home. I really appreciate you tuning into my channel, and if you're new to my channel, please make sure you like, subscribe, and engage with me. Let's keep going. Now, what does it mean for a seller with the increase in the interest rates in Las Vegas? Take a look at this chart. So this infographics says that pricing matters. And pricing does matter because we currently have an average of 128 days on the market. And what that means is homes are sitting in the inventory for a much longer time, and you're competing with more homes, more similar homes in the same neighborhood. Whereas before, last summer, maybe you were the only listing in your neighborhood. So you had more advantage, right? There were more buyers competing for the same product in your neighborhood, so there were multiple offer situations. We're not seeing that anymore. And if you're a seller and you didn't price your home right, you are going to be sitting on the market for a longer time, and we were seeing those numbers go up and up every week. And you may have to experience a price reduction, and maybe not just one, but multiple times in order to get the attention of these buyers. What's important for sellers right now, and I do have a lot of listings myself, is to make sure that you're pricing the home right from the beginning. Not playing games, not thinking, okay, maybe I could stretch a little bit, but pricing your home right based on the comps in the neighborhood so that you don't have to make these further price reductions that we're all seeing right now. So in this infographics here, as we said, pricing matters. For buyers, there's a risk in waiting to purchase. For sellers, pricing your property correctly matters more than ever. And as you can see, with a 4% interest rate, you have a purchase price of $555,000, 5% interest rate, purchase price of $500,000, and 6% interest rate, $450,000 purchase price, all with the same monthly payment of approximately $2,150. While you wait for these interest rates to go up, you're risking yourself as a buyer to be not able to afford these homes at your budget or your price point that you had maybe anticipated. And as sellers, you need to make sure you're listing your home correctly so that you're getting the attention of the buyers from the beginning and not having to do price reductions as you're staying on the market for a longer time. Where do you guys see the market going? Comment below. Do you think there's going to be another interest rate increase next month, as all the industry professionals are saying? Or what are your feedback? Are you a buyer and are you waiting? Why? I'd love to hear from you. Comment below and let me know if this increase in interest rates is scaring you and you want to hold off, or maybe you have other reasons why you're holding off on purchasing. I'd love to hear your comments and feedback. If you're new to my channel, thank you so much for watching. Make sure you like, subscribe, and engage with me, and see you on the next one.